Good morning. You listen to FloorDaily.net, and I'm Kemp Harr. This morning, my guest is Jay Smith, Vice President of Sales with Shaw's Builder and Multifamily business. Jay, how you doing?
Fantastic, Kemp. Good morning.
Good to talk to you. It's been a little over a year or so since we've caught up. You've been in this role for a couple of years, and you spent over 20 years at Floor Expo FEI Group, 9 years at Mohawk, and a few years at DuPont Flooring Systems. So you've got a lot of experience in the flooring business. I wanted to talk today about the builder market and where it stands. I did an interview last week with Pam Danzinger, and she was telling us that the retail side of the residential flooring business is probably going to be soft, probably into the second quarter of next year. I wanted to get a read from you on kind of where the builder market was. Why don't you give us a couple of sound bites there, if you will?
Absolutely. Well, I would agree with her, the retail, because that's a big part of who we are. Shaw Industries, of course, has been a little soft this year. The builder market has been a little more of a mixed bag. If you look back to last fall, where it kind of fell off the table a little bit, that was tough. And we're living that sort of air pocket, I call it, Kemp, now that's coming through because, as you know, when a home gets ready to be built, we're 6 to 9 months down the road before we get flooring. So that's what we're having now. But our end user customers, the builders, who, of course, drive this business, have rebounded dramatically from Q1 of this year. So we're bullish as we look forward. Just in the last couple of weeks, we hear from the end user folks, the builders, that traffic has been slightly off. And yeah, I think you can see that. You mentioned the last time we spoke, it seems like the confidence level was up around 80, went down as low as 30, and now it's bounced back up and it's right in the middle at 50. And that's an inflection point. Below 50 means a negative outlook. Above means positive. So we've tracked back, and there's some good reasons for that.
Okay. One stat that we got last week that was interesting is that new home sales in July were up 31.5% over the previous year. So I guess there was a little burst of energy.
Yeah, and that relates to what we've been seeing this year. Is I think there's a few things driving the business. The housing supply is low, right? So that's a tailwind for us. And last year we were around 700, 750. We'd like to see that up around 900,000 single-family homes. So we still believe we're 2.3, maybe 2.5 million homes short in the marketplace. So that fundamental inventory driver is there. That said, we all know the biggest number one word that's our headwind, of course, is affordability, driven largely by interest rates. And when interest rates are between 6 and 7, that hampers sales. And certainly you see it more with existing homes than you do with new homes. And I think one of the things that's maybe underappreciated, Kemp, is that the builder really has a real advantage because the large builders can buy down the interest rates, making it more attractive, particularly more attractive for a first-time step-up home buyer. And that drives a lot of our business for us and our customers in this space. So that's kind of the yin-yang of the space right now as we see it.
So there's buy-downs. That's actually the builder throwing in at closing to reduce the rate of the mortgage so that the monthly expense to the owner is lower, right?
Absolutely correct. Instead of paying, 7 and change, you might pay 5 and change. On the flip side of that, of course, if you're in an existing home and you've got a 3% mortgage, you're reticent to give that up today. What that's produced is an outsized portion of the sales going to home builders, like 3 in 10 now, which normally is about 1 in 10. And that's a direct result of this dynamic we see in the marketplace. Coming back to that 50, I think that's a good number because there are both headwinds and tailwinds affecting this market right now. But because we're in the flooring industry, I'll also say one thing that here at Shaw that we're working on is we always want to be taking care of our customers and helping them drive their profitability in this space. And what we need to do as an industry, I think, is get a larger share of wallet because there's a lot of pressure on lower end product. There's a lack of selection that's offered in many cases, and some of that's mandated. So we really need to effort, and we're certainly doing that at Shaw, brand, value, aesthetics for flooring products and going for that share of market and helping drive profitability for our customers. And we feel like if we do that we'll be brought along and we'll do okay along the way as well.
So you're saying that the trick is to get the consumer, the home buyer, to want to spend a little bit more on the flooring finishes that are going in. And you're trying to do that through some messaging.
Well, absolutely. I mean, whether you're driving Anderson Tough-Tex, Core-Tec, Pet Perfect, we're always efforting that. But the additional challenge in the builder business, of course, is we have to convince between us and our contractor customer partners, we have to convince the builders themselves who offer selection and variety and brand, because in many cases, in the quest for efficiency, those selections are limited for us. You know what I mean? So it's a little tougher challenge there, but we certainly are working with our customers to drive that, because flooring, there's nothing that changes the home, the feel, the look, the experience, the livability more than the floor. And we need to be telling that story as an industry. And here at Shaw and Shaw Builder Multifamily, we're trying to lead that effort.
All right. One more little quick thing I want to end with is that when you start thinking about the long view on the potential for demand on the builder side, and you start looking at Warren Buffett, who owns Shaw Industries, I mean, he's just invested in some builders recently, right?
Absolutely. I think if you look at the long view, we would have said prior to that every time you and I talk, we here at Shaw, this is in our DNA. We believe in this space. We believe in this segment. We have a whole team that's dedicated to driving this, and we are always and forever committed to this segment. But it's very nice to see our owner, who's a pretty good stock picker, right, throw some pretty serious money into the space recently. So I think that bodes well for what we see. And I'll come back to what we talked about a minute ago. If you look at this space, household formations against inventory, against building pace, that says we should have a good run. I think it will be bumpy. There's ups and downs. We need to work on affordability. But looking down the road, we, like Warren Buffett, are bullish.
So he's bought into Horton and Lennar. Those are a few of the brands he's bought into, right?
Absolutely. Of course, he's already in the home building business with companies like Clayton and others.
Right. Okay, Jay, well, I appreciate you giving a little bit of insight on what's going on in the builder business. Again, you've been talking to Jay Smith, Vice President of Sales with Shaw's Builder Multifamily Business, and you've been listening to Kemp Harr and FloorDaily.net.